and welcome to today's edition of Business Incorporated. A warm welcome to all our viewers from around the world. I am Bolaji Akinwale. Coming up on the program, gold futures gain while global stocks retreat following explosions at a Brussels airport that reportedly left several people wounded and dead. The annual Africa CEO Forum taking place in Abidjan, the capital of Côte d'Ivoire, comes to a close today with the theme, New Realities, New Priorities. And plus, Kenyan and Ugandan presidents failed to reach a deal about which route to choose from oil exports pipeline that Kenya wants to go through its territory rather than neighboring Tanzania. We'll begin with the report on the gold markets, looking at the futures gaining today on apparent haven demand, while global stocks retreated following explosions at a Brussels airport that reportedly left several people dead and wounded. The airspace in Brussels have been closed according to reports, and so there is no incoming or outgoing flight at the moment. Now, gold futures traded 1.2% higher at $1,258.60 an ounce. European markets traded lower. The Stoxx Europe 600 was down 1.54% to 335.42. The pound also dropped nearly 1% against the dollar. Two explosions ripped through the Brussels airport's departure hall this morning, causing deaths and injuries. Passengers say the bomb went off in rapid succession around 8 a.m., the peak check-in hour for morning flights within Europe. And let's speak to Avi Aguedas, DW TV channel civic correspondent, standing by at the Frankfurt Stock Exchange as we take a look at the development in Europe. Hello, Avi. Welcome to the program. Now, update us on how the European markets are holding up in the wake of the Brussels airport explosions earlier today. Talk to us about the airlines and the share prices.
Well, of course, it was an initial shock at the markets, especially if you consider that these bombings, these attacks took place a few minutes before the markets started off the trading session. So what we saw at the very beginning were some strong losses there. As you can see in the curve on my back, the DAX started off with declines. It has recovered a little bit, but all in all, I would say that the DAX, as many others in the European stock markets, are losing a little bit less than 1%, between 0.5 and 1%, depending on the case. And this shows us that there is a slight recovery afterwards. As you just mentioned, the airlines are, of course, always hit first, and not only the airlines, but also the tourism companies, anything related to travel, because this, of course, scares off passengers, leads to immediate cancellations of trip plans to Brussels, of course, but also to other destinations in Europe. And that is something that hits the tourism operators all in all. So that is, let's say, a very classical reaction to a situation like this. It is very similar to what we saw just after the Paris attacks took place in November.
Now, how much of this present and constant fear of terror are weighing on investors' mind in the short to medium term?
Well, that is, of course, difficult to measure because here's the thing. The terrorist attack as such does not necessarily cause an economic harm. We know that. Of course, it is expensive to make any, repairings in buildings. It is going to be costly for the Brussels airport. But the terrorist attack as such does not have an immediate, long-lasting impact in the economy. What is definitely very expensive are the consequences. If we think about how the markets try to predict how businesses are going to perform, well, it is, of course, the tourism companies and the airlines, as I just mentioned, that get hit first, because that might lead to increased security measures at airports. It might make traveling more difficult. We know what happened just after the September 11th attacks in the United States. That led to many of the security measures that we know today. It also led to a crisis in the airline sector. So all of those types of measures are the ones that can have a long-lasting impact. And of course, since this is a situation that is now getting increasingly pan-European, or at least for Central Europe, it's not only a problem that is affecting France, now it is also directly affecting Belgium. It might in the future affect other countries like Austria, like Denmark, or of course Germany or the United Kingdom. Well, that might lead to increased efforts from the country's security forces and from the country's governments, which of course costs money as well. So those are the types of impacts that investors take into consideration, not the cost of the terror attack as such.
Now, Avi, what else is on tap today from the economic front, like the French PMI data?
Yes, we received the French PMI data, which was a little bit disappointing, a little bit below expectations. That is something that did not cause an immediate negative effect, but of course it is worrying if you consider that the French economy is trying to recover. On the other hand, we received some positive news coming from the German Ifo Business Climate Index, which measures the business activity in Germany. That was actually better than expected, something that was a surprise, and that actually was one of the factors why we saw a slight recovery after the initial loss in the trading session. That indicates that the German economy might be moving faster than we initially thought. All in all, it is very important to consider that we are in the midst of the Easter week here in Germany. It's going to be a shorter week than normal. It's going to end on Thursday, and that also means that there's not much movement in the market. So any transaction that makes the indices move up or down will be heavier, will have more of an impact than it would in a normal trading session. So all in all, we're just waiting and seeing how things develop.
Okay, that'll be all, Avi. Thank you so much for your time. Avi Aguirre is the DWTV Channels TV correspondent reporting from the Frankfurt Stock Exchange. We'll go on a break. I will be right back.